Hey everybody, how's everyone doing? Yes, it is pretty nice. Last week though, I had troubles getting it to work correctly whenever I wanted to record. So last week's presentation didn't record, but yeah, the cat's out of the bag now. Y'all know who Amber is. uh, the XYXX chromosome mystery has been solved. uh, well, I do have a baby, okay, and she's right over here. She's the newest addition to the family. This is what I do all day. I take care of this little one and the other kids while my wife goes to work. So I'm a stay-at-home dad, but this is my trading buddy here. She's a couple months old, and she always hangs out with me and trades. So I'm teaching her from a young age. But this is Tesla, named after Nikola Tesla, because I really like that dude. Okay. Yeah. So if I get a little bit, off, I'm going to be like giving her a bottle here pretty soon or something like that. But she's kind of chilled out right now, so we're pretty good. So anyways, I'm going to break this up into many different segments because just I know there'll be a lot of questions between each part and each section of my trading style and whatnot. So there'll be multiple webinars. I'm going to record them all so they could be watched again. Hopefully the recorder works this time. So no sound. Someone's having a problem with sound. See, there she goes. Who wants to pop up? Okay. So let me see here if I can share the screen. And I'll put that up, start sharing. See what screen it's actually going to share. Good. Shares my MP4 screen. You guys should be able to enlarge this or shrink it down, just depending on your dock size or your monitor size. You want it? No? So. I really like it, especially for doing webinar presentations. I actually just started, and it's all part of like this marketing suite that I have, and it's got the autoresponder and everything like that. So that's why, but it's a new software. It's a new company basically that just started up, and all the software is new. There's still bugs in it, but I do really like it because it's so much cheaper than having GoToMeeting, Aweber, all these other things. So anyway, let's see here. Shall we get started? So what I did last week was basically I went over the Fibonacci portion because a lot of people ask me about the fibs. It is a big part of the way I trade. Get rid of the grid here. Still recording. Mouthful of coffee grounds. What's up, baby? Alright, she's gonna hang out with me a little more. Yeah, it's not working for you there, is it? We'll come hang out with Daddy. Because I'm talented at this. Huh. I'm gonna get a little more comfortable here. Here you go. Nope, she just wants to hang out. Okay. So to start off, I open a fresh chart. I'm going to go through every little thing fresh. Okay. That way people can see it from start to beginning, and exactly what I'm doing. Good. Everyone can hear me. We're good with everything. Okay. So I start off with a fresh chart. Got some spit up going. I add zigzag. Okay, just regular old zigzag. So this gives me my waves. Okay. So there we go. Chart with zigzag. I go to candlesticks. I zoom in a little bit. And I'm going to do this in different versions because there are different parts, and a lot of people have different questions about all the different parts. I add my fibs, and I'm gonna start this back down here because a lot of people want to see it from like a reversal point. My fibs, you can see I've changed them up. I've switched them around because I believe when we're going up, a 25% retracement is going to get hit before a 38, 50, 61, 75. So depending on whether we're going up or down, I also have fib expansion of 113, 127, 161.8. Yeah, I'm on a 1-hour chart. And this really works on in pretty much any time frame. I really do prefer it on the 4-hour, but it works on any time frame. So I don't have a 0 and 100 because to me it's just clutter, extra clutter. I know whenever I pass, the highest high or the lowest low that I'm past the 0 or I'm past the 100. They're pretty much irrelevant. So we could take it from like this reversal down here. Let's say we were moving down. Okay. And is what I look for is price retracing into the retracement zone. Okay, I guess I should start a little bit earlier here. Basically, there's two waves that are important. Impulsive waves, corrective waves. Impulsive waves go with trend. Corrective waves go against trend. Okay, we look for retracement, which is going to be our corrective wave. And then we look for an impulsive wave, which is going to be another wave with trend. Now, as you can see where I've got my fibs on the bottom down here. Scroll. Okay. How do you know? How do you know when it's changed? If you get a full bar, which means every part of the bar, the open, high, low, and close, are above the 75. They pass the 75. That's when you know there's been a reversal. Also, that's where your first entry can be. So say we entered at the close of this bar in the blue box. That's going to be our reversal bar. That tells me trend has reversed. Okay. So I move my fibs to this wave whenever it has completed. Got it so far? Okay. So next thing we look for, okay, is retracement. So this one's going to be our impulsive wave. This is our corrective wave. This is our retracement. Generally, I like to see the retracement down into this area, somewhere between the 38.2, the 61.8. If by chance you get one down here, okay, this would be your exit / reversal. Get out. It was no good. Right. Anywhere below the 75 level, 25 level. Okay, so this run up on Euro, let's say it was run up. We had a corrective wave. Now you can see my zigzags point out my waves here. So we had a corrective wave. It didn't retrace into the zone, so I'm just going to stick with my original entry of 128.53. Okay, now this wave has happened. The next impulsive wave to the upside has happened, so we will move our fibs. All right, now we've got another corrective wave right here. I'm going to move my boxes with it so you can see. This is what I look for. I like to see it in this zone. Now, you can add on here. You could add a trade in here at the 50% retracement, 38% retracement, 61.8%, wherever it corrects to. However, you take more risk there because you don't have a confirmation that it's going higher. Okay? Here, this bar right here tells me we're going higher because it has closed fully above the 25% retracement level. We had retracement into the zone. That happens first, 25% retracement, or more than 25 down into the zone, and then we get this full bar. And then when I say full bar, I mean the high, the low, the close. Absolutely no part of this bar can touch the 25. Okay? So this could be a second entry. At the close of this bar, say you want to enter again. Everybody with me so far? I'm hoping so. Yeah, okay, good. Pretty much. Well, I'll give you guys some time to answer or ask questions at the end of it. So now, as you can see here, I consider a corrective wave to stay. You can see there's a couple more waves in here. I consider it, if it stays the one between the 0 and the 100, we're still in a corrective wave. It's not until we really break out up into the 113, 127, 161. I really like to see the 161 before I move my fibs. So we went above the 127 here. You know, we're on our way to the 161. I'd consider all three of these waves right in here a corrective wave because we didn't go above 100 yet. Because this one went above 100, 113, 127, this is the next impulsive wave that I'm going to move my fibs to. Yeah, this is a longer term strategy. I mean, we're talking days here, but you'll see the results when we're done, of course. Okay, now here, our impulsive wave took us up higher. We retraced till the 25. We took off to the 113. No big deal. Okay. I need my blue box back, way back over here. We did get retracement into the zone once again. So we got a retracement back to the 50. Like I said, if you want to take the risk, you can add here, but the problem is we're moving down. You know, it is a corrective wave. We are moving down. There is a chance that, you know, it comes down here and you get stopped out. That's why I suggest waiting for the next bar. Grab my green box here. That closes above the 25. See, this one's touching the 25. Oh, no, this one right here is not. So this is our confirmation bar that Euro US dollar is going to go higher. Okay. You could add here again if you wanted to, or you just keep holding your first two trades. So let's say we added there a third trade. So right now we're in, I have 3 trades in. All right. Oh, what happened to my first one? Oh, it's way down there. 128.53, 130.30, and 130.81. Okay. We did move higher here. This is basically a consolidation right here. You could move the fibs again. Like I said, I don't like it. I do move them after it goes above 100. I prefer to see the 161, which we have over here. To me, this would be all corrective because we didn't pass the 75 off of this wave, and we did a lot of ranging here. Even if we moved them, more than likely it would not give us an exit on this wave. No, it did exit there. It did say to exit. But because we only went to the lean, we didn't really get above the 127. We did go to the 127. We didn't get to the 161. I hold, because I know the trend's up. Another tool, I guess I should put this up. Another tool that I use is what I call a heads-up display. Okay, you can see it gives me the candle time, and it also gives me daily RSI. Now, even though I'm on an hourly chart, I want to see the daily RSI. It doesn't matter to me if the line's going up, the line's going down. It's a filter that tells me if we are above 50, if the daily RSI is above 50, you stay in the trade. Okay. If it's below 50, then you want to be selling. If it's above 50, you want to be buying, and you also want to stay in. So the daily RSI all through all this was at 50 still, so that's my filter basically to stay in. Now, I move my fibs once again to this wave, which we are currently on. And it could go higher right now because, you know, it's live market time. It could just continue moving up. And until I get a zigzag that pops up and gives me a corrective wave, I really don't know. Take profit. That, you know, a lot of people ask me when I take profit. Well, you know, one of my theories is you'll never go broke by taking profit. So, you know, if you like it, you see it, you feel it's going to turn, we just hit some major support or resistance, you could get out, you can move up your stop, you know, you move your stop right here below the 75, you know, hey, if we get a reversal going the other way, I want to get out. Oh, the screen just went blue over there. Nice. And you just keep doing that. And I mean, right now, we entered off of the first reversal down there at the bottom. Down here where I started, That means we got in at 128.53. We're at 131.83. Calculator. Sorry, I'm not still trying to wake up here. So 28.53 minus 31.83. So right now our best trade's holding 330 pips. Yeah, we were in the trade for what, 10 days now, 12 days total. So a 12-day trade, we're still in. This one feels, no heat. I mean, there's no reason for us to even close this one because price is moving our way, And I like to add to the winner. So this one was winner. It's pushing higher. It's saying, hey, we're heading up. The impulsive waves are moving up, moving up, moving up. And that's what helps me stay in a trade and, be able to hold for weeks. Yeah, 30 pips a day, and all I got to do is move my fibs. I could run my stop loss, like I said. We could put a stop right here below the 75. Sometimes you do get a 75% retracement. This is where I add in like the pivots or something else. Even if we grouped all our stops together, we'd have 2 trades that were in profit right now, 3 trades really that are in profit, 2 trades that are in profit covered with a stop, 3 trades, let them run because we're going to make money on them. Whenever we get the next correction and the next wave up, we could move all of our stops on all 3 of these trades, and we'd be doing good. I mean, really, we're up on the first one, what I say, 330 pips. This one's 30-30, that's 150. So 480 pips. We got a third one at 30.81, that's an extra 100. There's 580 pips right there that you could close out in 10 days. And you just keep on running it, letting it go. Hello. So does everyone understand how that works? And it takes you some time to get to using it and noticing it and learning how it works. But, you've got to pay attention to stuff like whenever price is ranging, you obviously don't really want to move fibs in there. You really want it to break out of the range. Yeah, because once you get the break out of the range, that's going to be your impulsive wave. And I know it really sucks holding in a range, watching it go up and down and up and down. But that's where the daily RSI comes in as a filter to tell you, yep, you're good, just keep holding. It's just a little bit of price, range action, holding out. Here's obviously a trade that I did just before the Japan, or right on 3rd, 4th of Japan. This was a fundamental trade, but I'm still holding it. I'm up like, I don't know, 900 and something pips on that at the moment. And there's no reason for me to get out. If I put fibs on this GJ daily right here, we've had retracement into the zone. I actually added right here yesterday at 146.60, right at the bottom of this pin bar pretty much. I added right there, and I made a couple hundred pips on it this morning just on that part. We could even look at GJ too, but I'm still holding this one. And the thing is, I'm going to continue to hold it, I don't know, months, weeks, years, because even though we retraced, order flow, price action is still moving up. You know, I plan on holding it as long as I possibly can. I'm going to get as much out of this trade as I can. I can move it and go back to MT4 and pull up a GJ chart. Let's go to Great Britain. I'm going to do the same thing on this chart, but I'm going to change it to a daily. Get rid of that grid. I don't like the grid. Just more noise on the chart. I create enough noise myself on the chart. Add my zigzag. Add my daily RSI. Where's my hood? Good. And we can even do this from way back here on Great Britain, Japan, from the time it reversed on a daily, and you would see the same thing. This was a huge run up on Great Britain, Japan recently. So here's the bottom. Kind of have a little bit of a range double bottom down here going on. And it did give you an exit for a reversal here. Flip these around. Give you an exit here. So we kind of ranged, we kind of bottomed right here. But had we moved our fifth to here, at some point in time, it's going to give us a reversal. This is what I always do. This is where I always start. I find a bottom or a top, and I start there. And once I see a reversal, I go with it. So chart is not changing now. Okay. All right. Let me not see. Okay, we're still recording. I'm going to hit stop sharing for a minute and start sharing again. Yeah, it's probably a bug. You know, like I said, it is new software, and there have been a couple bugs that they're slowly working out of it. Okay, there we go. Now you can see it again. So on GJ, just before this monstrous run up, we're at the bottom. We had some ranging in here on a daily. I mean, you got to remember this is a daily chart, but I'll show you how effective this could be over a long term. You can, I mean, it even works on smaller time frame too. I've used this on 5 minutes for like 3 days to a week at a time, and I can get 400 or 500 pips out of a 5-minute chart doing this exact same thing. Yeah, I can catch a good run of a 4 or 5 minute chart. So I'm going to zoom in a little bit here. So here's the bottom. We're coming down. This is actually like our first reversal wave here. Hopefully you guys can see this. Okay, looks like it's moving to me. So right here we had retracement here. It did not. We didn't get a bar close below the 25 because this would have been our move down. We didn't really get a bar close below there, but we did get a bar that closed above our 25 right here. So this would have been our entry on Great Britain, Japan. Close of that first bar right there. The first little doji. 124.80. You all know where Great Britain, Japan is at today. Okay. So that was our corrective wave. Here's our impulsive. We had retracement right down here into the zone, into the retracement zone. We had a full bar close above it, a move up to about the 113. Gonna move your fibs right to there. See, we had retracement here all the way to the 75. That's not a major problem. We didn't have a full bar close below the 75. So retracement to it, retracement past it, as long as the full bar doesn't close below it, we continue in the same direction. And this is where I say, you know, maybe place your stops a little bit farther out of range, past the 75. Whenever you're getting closer to the top, moving up tight, you know, because it's more than likely going to reverse soon. Money management, risk management. I know it's a hard thing for a lot of people, but it's really something that they got to be able to do. They got to be able to learn. Can you still see it? Can you see it now, Harold? Okay, cool. So I moved my fibs to the next wave. We had retracement to 25. We had another impulsive wave up to the 113. This one here is kind of sideways. You know, we definitely have a range here. I don't think I would move my my fibs within this range. I wouldn't let it scare me out. Because we got that range going on right there. Could have moved them. But it would have told you to exit here. And, you know, that's fine because that still would have been a good, 1,200 pips, you know. Or you can give it a little time, let it range because our daily RSI, the daily RSI on this GJ has been above 50 the whole time. Now, there's been no reason to exit as far as the relative strength. Now we move our fibs to here. And to be quite honest with you, I really don't think that that our retracement on Great Britain, Japan is done yet. I think I'm still waiting for the zigzag to show up. And I use the zigzag a lot because once it shows up, I know that we're starting to get, you know, that it's getting close to being a reversal. As long as it hasn't showed up yet, one of two things is going to happen. It's either going to move lower until it does, or we're going to move higher until it tops. So right now, I mean, this pin bar is really nice, and I would have to say more than likely that was our retracement down for this initial wave, but I believe that this wave is going to get longer. I believe that my fibs will be on a wave, you know, up to here, and that this zigzag on the daily is going to change to up in here somewhere, and then we'll have a corrective wave coming back down. I believe this is all still one wave. That's what a lot of people have troubles with fibs, is determining where to put their fibs. And am I on a wave or not? Or, you know, is this wave done, over with, whatnot? And that's where the zigzag really comes in handy, because it stops and it'll pop up, you know, another one saying, hey, you know, this is a wave down, this is a wave up, this is a wave down. And that's why I use it. And, you know, this is where I differ from some people on my fibs. But basically, you know, that's it. It's really simple. You know, a bar close below the 75 when you're moving up is going to be a reversal. That's where you want to go you want to sell as long as your daily RSI, your filter, is below 50. So those two are the criteria. Daily RSI below 50, you know, bar close below the 75, above the 25. I've been using this Fibonacci method now for, how long has it been, Harold? 2006. I've been using that since like 2006 with not only great accuracy, but really great trades. It's been a long time. Really, I've been using it for a really long time, and I love it. So that's the first part. Any questions? Now, this is not my method. I have changed some of the things about it, how I use it. Yeah, the zigzag's just default settings. I had the HUD, I had that made for me. So when you're shorting, you do the same thing in reverse. Yes, I do the exact same thing in reverse when I'm shorting. I move my fibs. I'd move them if we got the reversal. I'd move them here. And now the other thing too is you can use the 113, the 127, the 161 as targets. Say you don't want to stay, you don't want to hold. You believe it's moving up. You don't trust where the market's going, but yet you want to take profit along the way, build your account. So you're on this one. You could take profit at the 113, the 127, the 161. Take profit or move your stops up. So, right, exactly. The RSI would need to stay below 50. The HUD tool, yeah, I had it made, but I'd be willing to help you guys out and hook you up with it if you guys want it. It was really nice because you could put RSI on the chart, but the problem that I found with putting the RSI directly on the chart, of course, is it's for whatever time frame chart. So I got RSI here, and say I'm doing this on a 4-hour. Okay, my 4-hour RSI is saying 47.47. It's not my daily. And the only way for me to see the daily is to keep switching back or have a chart open with the daily. But then also, whenever you end up looking at the line dropping down, going, "Oh, RSI is dropping. I need to buy," or I need to sell. I need to sell. And it gets you confused. So that's why I just go off of a number on a daily. So. But I had a friend program that for me. And I actually have a different version of it too, to where there's a little more space between the bar time, the bar close time, and the RSI. It's just regular. It's set to 14. Let's see, edit, inputs. Just RSI period 14. That's even if I go into the HUD, my inputs here. I will shift adjust. The inputs. Yeah, see, this is an older model because I don't even have the. My original computer went down. Yeah, it's just a regular default RSI. Just a daily RSI with a period of 14. So, you know, the relative strength of the last 14 days. You know, our euro US dollar is moving higher. You know, so that rate is it's going to move higher than where I put my fids. So, yeah, you just keep trailing this as it goes. Um, you just keep moving the fids until finally it decides to reverse. Reverses, it gets down into here. This is where the second part comes in. Uh, you know, if you guys all want the heads up display, I'll send it to you. I'll send it out in an email, and whoever wants it, just let me know. Either by email or let me know in the room. I'll send it out. It's definitely a handy tool without having to keep switching back and be able just to see it right there on the chart. So our U.S. dollar, euro U.S. dollar keeps heading higher. Now I use like a return to the means as far as moving averages go, and without confusing anybody here, I guess I could move into that portion today, and we'll get into more of it at a later date. But this is where I'm able to catch the retracements. You know, this is where I like to get in the hiccups, baby. Yeah. So I added a 50 and a 100 simple moving average right here under the chart. Um, you know, where they cross is obviously, you know, I don't really pay attention to anything about where they cross. The two things that I pay attention to is what's above what. You could even do the 200 here too. Obviously, if the 50 is above the 100 and the 100 is above the 200, trend is going to be moving up. Just the opposite. 200 is on top, 100 below that, 50 below that, trend is going to be moving down, right? Um, so what I really like to use these for is a return to the means with my fibs. So back down here at the bottom where we started, as I'm moving my fibs up, you can see price is getting extended away from the 50. As it extends, I start moving my fibs. Move it there, move it there. This one I would have considered as to be a corrective, so I would not have moved it there. So I moved it here. But you see right here, this pin bar, let me zoom in a little bit here. Uh, Pin bar, long wick pattern, whatever you want to call it. It came right down and touched the 50. To me, even though we're outside of the 75, that is an excellent place to add. Our RSI was still telling me we're above 50. You know, we're still in an up. The 50 is above the 100. Just the return to the means, just the return to that 50 right there says, hey, we're going higher. We have it here. We almost have a return to the 100. The 100 is going to be even stronger. You get a return to the 100, like here, most of the time, it is a much stronger takeoff. Same thing right here. We got them both crossing. Yeah, I mean, we have crossed it below them, but let me do it on GJ. And let's go to the 4-hour, which we're on. And let's look at yesterday. This is where I bought. Look at that. 4-hour chart. We bounced right at that 100. So that's the only thing I use moving averages for, really, is a return to the mean. You know, return to that moving average. Get rid of this. Oh. Okay, so yesterday, I mean, we had this really nice run up after the Bank of Japan announced they're going to double down their bond buying. So we had this really nice run up. We had this retracement down. It just started moving really fast. And this is what I was telling Harold one day. Whenever we get that really fast downward momentum in a strong uptrend, that's where you want to be buying. And I did. I caught 146.60. I caught this right at the bottom. I closed it out this morning. Right up here is right at about, close to the 150. I think I got out at like 149.80 when I woke up. Um, but I bought at 146.60. Reason I bought, even though this bar was totally white and momentum was flying down, that's the time to buy, in my opinion, because I like to buy bottoms. I like to buy retracements. I like to buy dips. I'm looking at I was seeing the 50% retracement level here and the 100. These are kind of grouped together. So with those two being together, as soon as that thing touched that 100 and it started moving up, I jumped in. I jumped in head first, and I made good money off of it. I made like 380 pips off of that trade, just on that run up, and it was fast. It was good, instant, quick money. My stop was right below. I'd place my stop right here, just below this, and hey, it worked. It worked great. And this happens all the time. You can put this on your chart. Right here was the 50. You can see where it really stalled on the 50. The 50 didn't want to let it go originally. It held on to the 50 pretty good also before it broke through the 50. There's a lot of times moving averages. If it breaks through one, it's like the next one, and that's exactly what happened. The 50 was holding. It broke through that 50, instant magnet straight to the 100. But the 100 held really good. So I used this, like I said, when I said earlier you could buy in this area. This is why I'd buy in this area, because I got to get something else backing me up, which is going to be my moving averages. And this works really good. My third confirmation. We can go all over all this. I'll do other webinars on all this stuff too. There's some weekly pivots. Okay, look at that. Right to the weekly S2. So weekly support 2, 100 SMA, 50% retracement. It makes for a very strong buy area. So we hit support. We hit a 100 a return to the means of the 100 a 4-hour period simple moving average. Perfect buy area. And we're going to see some resistance up here because we're going to have the weekly pivot point. We got the 50 SMA. We're going to have some resistance right there. But I do this over and over and over and over again, and small time frames, big time frames. You could do it on a 5-minute. Use like daily pivots. Still use the 50, 100. Still use the daily RSI. I'm in a Euro Japan right now, and it's in profit. I place my stop down here, out of the way. This is probably going to run some resistance also here, but I saw a buy opportunity there. I think it's just going to keep on climbing, so I'm just going to hold that. But any questions? At least on the first part, the fibs, the impulsive corrective waves. Everyone still hear me? Everyone fall asleep? Anyone fall asleep? Right, right. The fibs are just following the zigzag. I just okay. I just have the fibs following the zigzag because yeah, I see a lot of times people will yeah, whenever they're doing fibs, make this a big fat red line. I see a lot of times when people do fibs, they'll put it like right here off the top of this to this one, and they'll call that a wave. They'll say, oh yeah, that's where the fibs go. And to me, it's not because this is all still one wave. Even there is an up move here, and we have another down move here. I would not put my fibs there um, because there hasn't been a reversal here, in my opinion, because we have not passed this zero. We have not passed this bottom yet. Yeah, I believe in order to move fibs, you have to be making higher highs or lower lows. Yeah, I don't like having fibs anywhere in a range or yeah anywhere in a side market. They need to be on the wave before the sideways market. If you notice that you got your fibs and you're moving them, and every other wave is giving you an exit. Okay, you're ranging. You should be buying. You should put a support and resistance line on that thing, and be selling the top and buying the bottom. You know. Yeah, but that's and it really it bugged me. It really bugged me whenever people put fibs on a corrective wave, and they say, "Oh, we're getting 50% retracement." No, we're correcting. You got your fibs in the wrong spot. We should not be on a corrective wave with that at the moment, and we should be keeping them on a wave that's moving with trend. See, our euro's still moving higher, so I'll keep moving my fibs up on this euro, and I mean we're at 131.93 now, so on our big trades we placed here, we're pushing like 600 pips on this puppy, I mean on 3 trades over 14 days. And it does. It takes a while, the psychology of a lot of traders to be able to place a trade, hold it, leave it, let it run overnight. Um, that takes a while to get through. That takes a while for anyone to get over. You know, um, it's hard. It's definitely hard. And that's something else we can go into too at a later date. And I'm gonna, like I said, my method is pretty complex. I'm just going over some technical stuff with you right now. And this doesn't even come close to everything that I look at, everything I pay attention to when I'm trading. Um, this is just the main part of my technical. I pay attention to fundamental. I pay attention to psychological. Um, price, where price is at is probably the least of what I worry about. I know there's psychological levels and stuff like that. Yeah, a lot of them do have reversals, bounces, stuff like that, but I don't really pay attention to that. I do like to see, you know, the psychological part of trading is probably the biggest hurdle that I ever had to overcome, and probably still the biggest thing that fights me. Even though I know it when I see it, I know it when I'm doing it, I know it, when other people are doing it, I know it when I see it, other people doing it. The psychological part is the hardest part. It is. I mean, especially when you're dealing with real money and stuff. What are you trying to get at? No, I just demonstrated on 1 hour. I use multiple time frames. Um, I do this on the 1 hour daily, 15 minute. Yeah, sometimes, just depending on really how tight of an entry I want to get into. Mostly 1 hour and up, you know. Um, let's switch this over to a weekly. Okay. Harold was there when I bought, clear down here, 120.79, I believe it was. And this is what I was doing. If I zoom out here, I had my fibs on this wave, and this is a weekly chart, so I even do this on I had my fibs on this wave right here. Euro's moving down for weeks, on end. We had a corrective wave here. We had an impulsive wave. We corrected almost to the 38 there. We had this one here telling me that we're going lower. But I'm looking at, with my fib still on this wave, I'm looking down here at this 127 fib expansion, and this is an area of interest for me. So I was looking for a reversal down in here. And I did. I caught it. I bought down here. And I've worked this whole weekly chart. And I've worked it from the 4 hour time frame. Now going from the 4 hour, we've got a whole bunch of, we got down wave here, up wave here, impulsive, corrective, good impulsive, good corrective. I believe that's what I was looking at, but I do use this main weekly chart as good support resistance areas. I was even saying we'd be down here into this area like a couple months ago. We were actually up in here. I was expecting it to drop down. We continued higher, but the wave wasn't finished yet. I didn't have that completed zigzag moving up yet. I didn't have this completed zigzag moving down. I just lost it. I'm still recording, but I did lose screen sharing. Yeah, Harold remembers it. Okay. The zigzag settings are just like you find them under the custom indicators list. It's just the standard settings. I didn't change the zigzag settings at all. I believe, let me look here. I think it's 9, whatever the standard ones are. Oh, I still got screen sharing. Yeah, I thought I had lost it there for a second. No. Okay. Yeah, okay, so the depth is 12, extended deviation 5, extended backstep 3. So 12, 5, and 3 are my zigzag settings. Okay, so here on this euro, I believe I was looking at the 4 hour chart as I bought into that bottom at 120.79. I know one of my fibs lined up there somewhere. It's been a while. But I just know it's a method I can trust, and then I know that no matter what, it tells me when to get out and when to get in, when to get out. Yeah, so right here is where I was at. And I was using the 4 hour method here all the way down, moving my fibs, and it gave me a reversal right here on this one. So my fibs are on here, a little bit more. You can see the moving averages follow all the way down too on this 4 hour. First bar close, this one right. This bar right here is at 122.56. Right there, 122.88 was where it closed. I got in a little earlier at like 122.79. And I held that for a long time. And the thing was, okay, we were moving down, you know, Euro USD at the time was moving down, and everyone was saying, you are crazy for buying here. What are you doing buying here? Trend is down. It's moving down. Well, guess what? My RSI changed over to 50. My RSI told me, hey, you know, my filter said, we got to go the other way. It went to the top side. I got this reversal signal. Now I zoom out as far as I can here. Here's the same thing. I bought down here. This whole run up, we had a corrective wave here. This whole run up, you know, it went from 120.79 to 142 almost. Yeah, I took profit along the way. I got in, I got out, I sold short in this area, I bought here, I went long again, you know. But I bought down here at the bottom where everyone's gone, you're crazy for doing that. RSI is 14, period of 14 on the RSI. So, but you can see, you know, it is the 50, 100, you know, moving averages are going to show you your trend, and it's not the crosses I look for, it's the return to the means, you know, the return to the average that I look for places to add with the trend. And then just the fact that if the 100 is above the 50, you know, we're going down. If the 50 is above the 100, we're moving up. So I don't pay attention to the cross, but you see here, it bounced right off the 50. Here, it bounced right off the 50. You know, zooming out on your chart a lot of times helps too, you know. A lot of times if you're standing too close to the tree to see the forest, it doesn't help. So here, this one would have been a short move. I run tight stops often. You know, I'll put I may give it a little room when I first open a trade, but if it starts going my way into profit, I'll move my stops up really close, really fast, because whenever it does reverse, I want out. I want out with my profit. So this one here almost touched the 50. This one did touch, bounced off a little bit, and then we crossed right back over. Here we were right at the cross. This one bounced off the 50. This one didn't even touch the 50 on this run up. It was just straight up. You know, didn't really get much of a 25% retracement here too. I mean, you bought this reversal here and held. That was quite a few pips there too. Here to wherever it tells us to reverse. 976 pips would probably about where it tells us to get out on a 4 hour chart. A couple of ways up. Is there a pair I don't trade? No, actually, I I trade the majors. I do Euro, U.S. dollar, U.S. Swiss, you know, the yen. Really loving the yens just because of the fundamental reasons at the moment. You know, U.S. CAD. That's probably about it. You know, yeah, I stick to the majors because there's liquidity in them. What you doing, Adeline? She's such a good mannered baby. Just hanging out on my lap, watching the charts, sitting up on my hand. So, I know, huh? She's just right here hanging with me. Now I pick her up and she's like, oh my God, don't do that. Right, you can do it either way. Pick a low spot, pick a high spot, work your way to current price. And, you know, whenever you get a bar close above or below the 25.75, that's either going to be your entry exit, it's going to be your reversal, and you just work your way up into wherever you're currently at. You know, obviously you can zoom out the chart a lot of times too, because you know when you zoom out, you can see a lot of sideways actions that. You know, even though I'm on a higher time frame here, this whole time right here was nothing but a range for the euro US dollar. We got this whole range right here. Whenever we're ranging like this, you know, you start to see this range going on a 4-hour. This is where I'd be using like the 5-minute to catch, you know, these runs in the range. You know, once I notice we're ranging, I'd use the 5-minute and take advantage of all these. Once we broke out of the range, you know, I'd start running these. It takes time, it takes practice to get used to it. That's the question. Then you don't get the ranging part or the better to pick a low spot, start working. You know, I mean, if we're currently moving up like we are, it's better to start at a low. You know, 1-hour, 4-hour chart, start moving. You know, euro, US dollar, and maybe that's what I'll do. I mean, maybe I'll have kind of like a thing on my website where I put out there, you know, current. Yeah, I'll even take a picture of it and be like, current Fibonacci wave where your fib should be. Just update it daily on a 4-hour and do something like that. So really on a 4-hour, you know, we're on the first wave here with our fibs. We just hit the 113. Might expect to see some resistance there. Let me move these 1-hour ones out of the way. So there's our 4-hour. We're right at the 113. Might see some resistance right here in this area. But depending on how far this wave keeps moving, I'd like to see it minimum up to the 127, possibly the 161. Then I'll move my fibs up to this wave, and this will be the next impulsive wave as long as price keeps moving higher. I'm sure it will, because I don't think we're going to see, we're not going to see a 75% retracement of this wave or better. It's late in the game on this one. On the 4-hour, we bounced right off that 50. Yeah. This would have been an awesome place to add for a longer term trade. Right, right. Only, not just when you hit the 75 or the 25, definitely, but only if you get a full bar, like the complete bar above or below it. There's got to be a space in between them. Because it can do a 75% retracement and take off and keep running. Yeah. But you begin the trades on either a reversal bar, or you add to them on a confirmation bar. And the confirmation is going to be above 25 in the direction of trend, or the reversal, the first bar that you get above your 75 whenever you get the reversal. So really, you could use this. Say you got some other method, some other method of trading, some other entry. You could use these fibs to keep you in that trade as long as possible. Yeah, I think it's a good way of probably making your trading, no matter what method you use for an entry or an exit. This has its own entry exit, but I'm thinking you could use it on wolf waves, Harold, and it would keep you in those wolf waves longer, possibly. I don't know, because I'm not really a wolf wave person. Someone could use it for support and resistance breakout. You know, you could use it for pin bar reversals and say, okay, I got in when this pin bar reversed right here, and now I'm going to use these fibs to hold it as long as I possibly can. So it's a method of holding trades through retracement, which a lot of people, me myself, have had problems with throughout the years. A lot of people they see all these green bars, they're in, they're good. The price reverses, it starts going against them. They see their equity going down, and they start thinking, oh crap, I got to get out, I got to get out, I got to get out because it's going to go against me and I'm going to lose this trade. And just about the time they cut loose and they get out for a very small profit or they even take a small loss, that's when price turns and keeps going with them, and they go, man, I wish I would have stayed in. Man, I wish I would have held that trade. It happens. It's a psychology thing, and that's something we'll have to get into. On a later webinar, I'll do one just about psychology and what people think, and I can show you, where people are thinking it, what they're thinking, and you go, yeah, that's me, that's what I do, because I've done it. But this will really help you stay in a trade no matter what your exits and entries are. And you can use it on a 5 minute. You drop this down to a 5 minute right now and go, okay, you'll see the exact same thing on a 5 minute. So even if you're using it on a smaller time frame. Here's our fibs of this last wave up. We have a retracement down, a bounce off the 50, a run up, a retracement down, a bounce off the 50. We get our next impulsive wave to the top side. You could have entered this morning, right, and been using this to hold and go, oh, okay, well, maybe you entered yesterday. Maybe, oh, wait, here we go. 5:05 a.m. You saw this pin bar bounce off of this support right here, and you entered. Okay, so say you did enter right there at that pin bar. That price on that's what. So you entered here 30, 36, 30, 36 at 5:05 a.m. this morning. This first wave happened. Okay, a lot of people, whenever this starts coming back on them, they go, oh, I need to get out. Or if they'd held it, waited for that retrace, they could have added a second trade whenever they were at plus 77. They could have held it to now where they would have been up 157. So Euro US dollars went up 157 pips today. Who caught the whole run? So, all right, guys. I've taken up over an hour of your time now, and I'm starting to get a cranky baby. So I'm going to have to go for now, and yeah, we can do this over and over and over again for, once a week I'll do a webinar if we need to go over something a second time. Most of you know where to find me. So, and I appreciate you hanging out and attending my webinar. So, happy trading to all, and we'll see you next week or hanging out in one of the rooms. Uh, have a good day. Oh, I know.